Apple releasing a slate of products that look exactly like the previous generation. Microsoft has partnered with NeoCloud Nebulas, and Tesla shares skyrocketing on the news that the company's vehicles are losing market share here in the United States and across the world. But shares are absolutely skyrocketing. We'll talk about those reasons. And there's also a lot of smaller stories that went under the radar this week. We'll discuss them all on today's video. What is going on, investors? Hopefully, guys are doing well out there. Let's kick things off like we always do with Meta Platforms. Start of the week at 762. This stock roughly flat as it heads into a key week. You've got Meta Connect. This is next week. It's in person, but also virtually as well. The company is expected to announce, some features, obviously, to their core products, advertising, those types of things. But we are likely also to get news on the AR and VR side of the company, including new Meta glasses expected to be released next week with some kind of heads-up display, if you will. Now, the company is also working with Anduril, whose founder originally founded Oculus, which was sold to Meta. I believe him and Mark Zuckerberg had a little bit of a falling out. They have a little bit of a bromance now, and the two are working on an Army contract that is worth, at least initially, about $200 million to create competing prototypes with another company. If selected, you are likely looking at a multi-billion-dollar type contract. And also with these types of contracts, now for a company like Meta, multi-trillion-dollar type of company, is not going to move the needle, at least in the short term. Maybe in the longer term, Army contracts could be a decent revenue driver. But what it does is it pushes the R&D forward, and then you release some stuff that is really cool for the Army and the Army can use, and then you modify it and you release consumer versions. That's what Meta at least is hoping for. Now, Amazon is reportedly getting in on the AR glasses trade as well as they look to take on Meta. These glasses likely to be used internally for some use cases for Amazon delivery drivers to allow them potentially not to have to access the phone. You probably noticed this when a delivery driver drops off a package, they often take a photo of it. They have to pull a device out. Well, multiply that action by tens of thousands of times per hour. What if it was as simply as them just putting the package down and the glasses automatically recognizing that and sending that feed? Well, you're saving seconds out of each person's day per package. And obviously seconds, when you're talking about trillion-dollar companies, ends up being trillions of dollars. Now, moving on to Apple. Start of the week at 239. We've got a big week for Apple from a product announcement perspective, but shares slid by about 2.3% finished week, close to 234. This is we get an all-new iPhone with slightly more modified design than what we've seen in the past. What was interesting is pricing more or less the same. We have a new phone feature, or one that kind of sits in the middle from the high end to the low end. You have this iPhone Air. I'm not exactly sure what market this is going after, considering it's a rather expensive phone. And it seems to me if I wanted an expensive phone, I would just buy the iPad Pro. But maybe if you've got tight-fitting clothing, or you rarely wear pockets, or I don't know where this thin phone fits in, but it sits above the iPhone 17. You also have new earbuds, which apparently have this kind of translation feature, which could be very interesting. You also have a new watch, both kind of on the low and the high end. I think the mistake that Apple makes, if I were to critique the company, is I'm watching the Apple event and I wanted to buy everything, but they delay the time when you can buy to today, Friday. And then obviously you don't get the items for maybe another week or so. I think what Apple should do is actually take orders directly as they're unveiling these things. We get all kinds of social media posts, but we have to wait till Friday to buy these things. It seems kind of an archaic way to sell these things. I think they should announce these things and immediately take our money, because as I was watching the Apple event, I think I would have bought the watch and the phone. And now that I've been given a couple of days to think about it, I'll probably still buy the phone and I'll probably still buy the watch, but I would have instantly done it when I saw the unveil. Now, this comes as analysts are not impressed with the product announcements, as D.A. Davison cut the price target down, or maintained a price target of about $250, about $15 higher than where shares are right now, as the designs in the product announcement left D.A. Davison uninspired. I'm not exactly sure what the fine analysts over at D.A. Davidson's were expecting. We get the leaks and essentially all of this info leading up to this event, so there wasn't anything to be inspired about, because we knew, in fact, we saw renderings of all these things, which ended up being 100% accurate. We saw these for the last 2 or 3 weeks with Apple. So there was nothing here. We also saw, when you watching like CNBC, people are talking about AI, and most of these people don't know AI and the difference between enterprise AI or consumer AI. I think Apple is actually making a wonderful strategy bet here when it comes to AI. And it's the fact that they are not going to invest in AI. Another Apple executive from the AI team plans to exit the company next month. And I think we've seen multiple exits into Meta and other companies. Apple is not going to invest in AI from a software perspective, not in a major way. And I actually think that's the right thing. I've said it multiple times here on the videos before. The business of being the default AI or one of the default AIs on Apple's iPhone is likely going to be wildly more profitable than if they were to develop their own large language model to begin with. The company that pays them to be the AI of Siri, the company that pays to be the AI on the phone, that ties in all the applications, the mail, the maps, everything. The company that does that is going to pay tens of billions of dollars to Apple on a monthly basis. And I believe that's a great business for Apple in the long run. Now, moving on to Amazon. Start of the week at 234. This one drifting lower by about 2.75% to finish the week at 228. You're going to want to see this one technically as it's setting up in an interesting spot. This company makes their splash in the quote robo-taxi or autonomous vehicle market as Zoox, which I believe is a wholly owned subsidiary of Amazon, makes history in the great city of Las Vegas, rolling out these toaster-style autonomous vehicles. Now, this is different than what we've seen with Waymo and certainly Tesla as well, as they are rolling out autonomous vehicles, which are essentially either modified or essentially Tesla vehicles that are just running autonomously or in some cases a safety driver. These are actually kind of bus or community type transit, which is a slightly different angle that we just haven't seen here, at least here in the United States. And so this is certainly going to have a market. And next time I'm in Las Vegas, which happens to be next month, we'll see if we can see any of those rolling around. On the EV side, the company is weighing their options on the delivery van side. You might notice that some delivery vans that Amazon operates are electric, currently made, I believe, by Rivian, almost exclusively by that company, but they are now testing Chevrolet and a handful of other companies as well, as they have a goal to put 100,000 EVs on the road by 2030 and probably eventually have those things driving themselves. This comes as they're also making investments in other countries from a delivery perspective. Now, this market is wide open. You get outside the United States, and even inside the United States, you have DoorDash, Instacart, Uber, and all these companies kind of competing in the same marketplace or a similar marketplace. Very similar when you look at it across the globe. It's very regional. Inside of Colombian delivery, you have this company called Rappi, which is known for its kind of last mile delivery to people's doorsteps. They're competing with kind of a local company that has more of a competitive advantage than Amazon, but obviously Amazon sees some opportunity as they're making an investment. And we talked about this with Meta. They're reportedly working on AR glasses, I think initially to assist their delivery and their employees, but also they'll roll those out to the public as well. Now, company is also expanding its $5 Pass prescription service to Texas. So if you're an Amazon Prime member, for $5 a month, you get this thing called RX Pass, which gives you access to over 50 commonly prescribed medications. I don't say this really as a news story, but just to make you aware of this. For some of you, this might be more cost effective, and it's something worth checking out if that is something you need. Also, big story. I said it at the beginning. There were stories that flew completely under the radar and nobody is talking about them. This is one. Netflix and Amazon tie up a programmatic ads partnership. Programmatic ads are essentially, in a nutshell, like Pepsi is like, I have an ad and I just want to spew it across the internet. Pepsi's one of them. They do less advertising, I think, than maybe they did when I was a kid. Nike is one of them. Procter & Gamble is another one. These companies that want to just have brand awareness. They're not really worried about the economics of the ads. They just want as many eyeballs as possible. Movie trailers fall into this. Video game trailers. They just want everybody to see it, likely under a certain demographic. In the past, Netflix was using maybe a version of the Trade Desk. They were certainly trying to develop this on their own, but what's interesting is Netflix and Amazon working working on this together, which means if I'm Pepsi or I'm Nike, I'm going to be able to go to them and get my ads displayed on both of the streaming giants. It's great from an ad perspective. I also saw that Amazon is making almost no money on this. And so if you were wondering why the Trade Desk is down 56% over the past year and down 61%, I mean, I see people on social media talking about this one, and all they're doing is looking at the price of the shares and how they're down. It's like first grade analysis. And it's like, guys, spend 30 minutes on the ad business and understand what is happening there, and you will run from the Trade Desk, run far away from it, rather than invest in it. Moving on to Netflix, start of the week at $12.45. This one drifting lower. Not liking the partnership potentially with Amazon, but down 4.6%. And one thing I will say when we get to technically is Netflix tends to lead FAANG, if you will, or the Mag 7 to the way up. If Netflix goes up, the rest of them come with it. If Netflix starts to go down, the rest of them tend to go down as well. It's likely not across the board, but just technically just understand as Netflix goes, tends to go the Mag 7. Now, big news inside of the entertainment business. Warner Brothers Discovery is essentially on the block, and Paramount Skydance wants a piece of it. In fact, they want the whole company. Currently, Warner Brothers Discovery shares are trading at about $18 per share. I think I have some because I owed AT&T and it spun out of AT&T, and I just left them in my broker account. So that's probably a good thing. A low to mid $20 per share bid should be acceptable, according to some, but obviously Warner Brothers Discovery wants the highest price possible. They're hoping Netflix gets involved and maybe potentially somebody else. What's interesting here, and this is completely flying under the radar a little bit, is you have Larry Ellison, who had a massive payday this week, obviously the majority owner of Oracle. I believe his son is behind Paramount Skydance, and so the Ellison family is going to throw a lot of money at the media business. And Warner Brothers Discovery owns outlets like CBS News and I believe also CNN. So it'll be very interesting if Larry Ellison and his family end up getting control of Warner Brothers Discovery. Larry Ellison happens to be a Republican mega donor, and it'll be interesting to see the content choices that CBS and CNN decide to make if they have Larry Ellison's family own the business. That'll be interesting to follow. Moving on to Nvidia. Start of the week at 169. Is this right? We don't got a full chart, but we're up 5% on Nvidia, bouncing back nicely up to $177 per share. This comes as the company gave a talk at a conference, and they say pretty much what we already knew, those H20s, which are modified Hopper chips to go into the country of China. They've received the licenses there. There also is some discussion that President Trump made a deal where they get 15%, the United States government gets 15% of sales of these, and that was more or less maybe a handshake deal, and there needed to be some signage there. But also you have China jawboning its corporations that to not buy these. My read on the situation is China is jawboning a little bit, but maybe potentially will look the other way on these sales. I don't think we have these sales flowing into China in a major way. I don't necessarily think we'll get an all clear sign, as well as China will probably want this to be a little bit more under the radar in terms of sales. Nvidia will obviously have to disclose it and those types of things, but that is something that could kind of funnel out into the marketplace. And if you see Nvidia shares continue to drift higher, it probably means H20 is moving into the market. This comes as the company announced a new chip called the Rubin CPX. This is aimed at the artificial intelligence video and software creation. There was a lot of discussion this week, particularly as it relates to Oracle and the remaining performance obligation that they have and the large book of business that they're projecting out into the future, and people doing first grade and kindergarten type of analysis on sites like X and other social media sites, and probably here on YouTube as well. They were saying, well, this is no way possible. And here's the thing that I actually sit here to say that it's actually more likely. It is more likely the revenue performance obligation that Oracle put out this week, and also we'll talk about when we get to the Google segment, they put out an RPO as well. I actually think it's more likely those numbers are going to come in light, meaning that those revenue performance obligations are probably underneath where they are likely to come in the future. That is because Right now, AI is progressing exactly like the internet did. If you're an old man like me, you remember the original internet? What was it? It was strictly text. And then we started getting images and graphics on websites. And then very quickly, or certainly over the past 15 years or so, it's shifted more and more to video, where video is the dominant format. AI is doing the same thing. 2 years ago, it was simply text prompts. Over the past year, you've got some image, and now you have like 8 to 10 second video. We are going to look back in a year or two and laugh at like the fact that AI was only able to create an 8 to 10 second video. In the future, it's going to create 8 to 10 minute videos and then 80 to 100 minute future feature films. The compute required, I don't need to tell most of you guys this, the compute required just to service AI videos is not even close to being built at the current time. If the current compute can't even formulate text and image response, then you know that the compute required to create AI video is going to be exponentially bigger than that. And if we start curing diseases, if we start having robotics and autonomous systems that are run by AI, well, you need even more and more compute. And so it's a long-winded way to say that Nvidia shares are probably worth buying. Now, Supermicro is shipping Nvidia Blackwell Ultra systems. What's interesting about Blackwell is that Blackwell is not even being used a lot right now from a training perspective. You might recall when Nvidia announced their earnings, this was like maybe a couple of weeks ago, they announced that Hopper sales, which is the previous generation of GPUs, those actually accelerated in the quarter, and they really surprised the upside. The primarily reason for that is the fact that large language models are still being trained on Hopper. That is because the Blackwell systems have not been fine-tuned enough to make it cost-effective yet. And so what you're seeing from the GPT models and the Groks and these types of things, what is making its way out into the marketplace is still being trained on Hopper. The belief is, though, that the Blackwell systems by the end of the year will start to get trained on. So we are not even until you're moving into 2026 and probably the springtime of 2026 until you see AI large language models that were trained on a superior GPU. And so we are still several months away. Anybody that's training on Hopper will still have a competitive advantage, but the large language models that figure out how to stitch these Blackwells together and then train a model on it that is more effective than Hopper is going to jump out to the lead next year. And that's when you're going to see the next leap and the next realization from the common investor. Okay, the common investor are not deep in the weeds on this. They can't even tell you the difference between Blackwell, H20, and Hopper. You all watching this absolutely understand all of that. And then what you have to understand is Blackwell is not even being utilized from a training perspective. It is really only primarily being used right now from a inference or running perspective. It certainly has advantages over Hopper. We are moving into the area of Blackwell from a training perspective. You've got to do some things from a software perspective, and more of these units have to be out there from a test environment perspective. But that is coming into next year, and that is coming very rapidly. And obviously, I believe the companies that were already at the forefront, the OpenAI, the Groks, and the Googles, they are likely to take another leap ahead. This is also why custom silicon is very profitable and popular as well. That is because the systems that Nvidia release are great, but they take a lot of fine tuning. And if you have the budget and you have the engineers like Meta, like Amazon, like Google, and like Microsoft, you might as well fine-tune some of these things yourself. Now, the company is at least rumored to be lessening its focus on its cloud service business. Not a lot of people understand or know that they have what they call the cloud, which is similar to like Amazon Web Services or Azure or those types of things. It appears, though, NVIDIA is using a lot of their cloud business or their cloud capacity for their own internal research uses as they are trying to figure out how to train Blackwell themselves so then they can teach the community and allow software patches and upgrades to go out into the community so they can sell more and more Blackwell, which is exponentially more expensive than the Hopper. Moving on to Google. Start of the week at 236, up 1.75%. Continuing the momentum higher up to 240 on Google, essentially sitting at all-time highs. This comes as the FTC is not going to give up probing these companies as they're probing Amazon and Google over their search advertising practices. This is largely on the advertising side. When you buy ads on either Google or Amazon or really anywhere, there's very little transparency on what you're paying and what the price is and those types of things. You try to figure that out. I think the companies can do a better job here because the value of advertising on Google and Amazon and anybody that has a large amount of reach is getting access to that reach. I don't think they need to make it as complicated to figure out what price I should be paying for the ads, or if I'm overpaying or maybe even in some cases underpaying the company for the ad space. I say this as an advertiser and somebody that has spent, maybe $1 million of my own money on ads. It'd be nice if it was a little more transparent. Perplexity is raising $200 million as that values their company at $20 billion. Again, this also falls underneath the revenue performance obligations that Google announced, which we'll talk about here in a second, and Oracle. These companies are raising money. Yeah, are they generating a lot of money from a revenue perspective? Are they profitable? No, but they're not even in revenue generation standpoint. They haven't even gotten to that phase. And so a lot of these RPOs or performance obligations, which Google is pegging at $106 billion, they say that is growing faster than revenue. Now, I saw, again, some kindergarten and first grade analysis saying, well, Oracle reported a $500 billion revenue performance obligation this week, and Google's is only 106. So Oracle must be pumping up the books or cooking up the books. No, what you have to understand is that Google has a tremendous amount of internal uses for their own performance obligation. And so they have Google Search, they have YouTube, they have Maps, they have, Docs. They can't let those services go down. And so they very much err on having capacity, enough capacity to service those websites, so they are rarely ever off of line. And so, yeah, they carve out a sliver of Google Cloud and lease that out to people. That's why their revenue performance obligation is $106 billion. Also, Google has invested heavily, as most of you know, into their own custom silicon made by Broadcom TPUs. And so there's less people in the marketplace. There's certainly more going forward, but less at the current time that want to lease TPUs versus a GPU made by Nvidia or certainly even AMD. And so they have a specialized product and they're only leasing out a sliver of it at a time. Oracle is in a different space. They do not have a lot of excess demand for their own internal uses. In fact, it's primarily external uses. And so there is a world where Oracle can have a larger revenue performance obligation than Google because they don't have the internal use cases. Now, on the semiconductor side, Qualcomm and Google deepen their partnership as Qualcomm makes a lot of the chips that go into Android-based devices, including Google phones. They're partnering to bring agentic AI into the auto industry. And I will tell you, the work that companies like Qualcomm and certainly Tesla, which we'll get to here in a moment, the work that they're putting into computerized systems in cars translates very nicely into the robotics business, which we'll talk about here in a moment when we get to Tesla. But first, we talk about Microsoft. Start of the week at $497, up 2.5%. To finish the week at $509. If it was at $209, I'd have a heart attack because I've got a few shares of this in my broker account, probably like most of you. Now, OpenAI and Microsoft redefining their deal. This comes as Microsoft has invested two different times, at least as we know of, into OpenAI, including $1 billion in 2019 and $10 billion for like half of the company in 2023. You got to be one of the best investments of all time. It appears that OpenAI is going to have we'll put this in air quotes, guys, a nonprofit arm that they're going to fund with like $100 billion, or are going to have $100 billion stake in the company. They'll have a for-profit arm, which will allow OpenAI to pursue different types of revenues and other partnerships, which it certainly has been open to do over the past couple of weeks. This is a deal that's still, I think, getting formulated. It seems like it's pretty much tied up, but we'll have more news on that in the coming weeks. This comes as Microsoft's not wanting to put all its eggs in the OpenAI basket, as this was incredible news this week as they partner with Anthropic to help power parts of Office 365 Copilot. This is unbelievable, because Anthropic, as most of you know, has a majority or a large ownership, or Amazon has a decent stake inside of Anthropic. And here's the interesting part about this deal is Microsoft, to access Anthropic, actually has to buy or run this through Amazon US. And so we have the largest AI software company, which is Microsoft. They have a large investment in OpenAI, which is the largest independent or private AI company. Also, Microsoft operating the second largest cloud service provider behind Amazon in terms of revenue. Microsoft has to go to Anthropic, which is second place to OpenAI, and also has to go to AWS, another competitor. It shows you, this should show you right here. This is not normal. I've been doing this show for a while now. We're probably coming into our fifth or sixth year of me doing this show. This headline right here is extraordinary on its own. And in years past, this is all we would have talked about. Now it's like a passing type of thing. The fact that Microsoft is doing this is showing you how much demand is out there. And so when you see people snickering at Larry Ellison, who's his left pinky toe is 10 times more successful than pretty much anybody that posts on X or any social media site. When you see people snickering at Oracle or the numbers being thrown out by these AI companies, just understand this headline explains it all. The fact that you have these types of partnerships are showing you the types of demand that is out there. Also, from a partnership perspective, you have Nebius rocketing up a huge amount. I think it was up 50% this week as it inked a $17.5 billion deal with Microsoft. Now, couple of interesting things about Nebius. Over the past 5 days, shares are up 37%. Year to date, they're up 231%. They inked a $17 billion deal, and the company's worth at the current time $22 billion. In fact, when they signed the deal, it was almost in excess of the market cap of the company. Now, if you are paying close attention to what we're doing over here, John McHugh of Equity Empire recommended Nebius put it on a platter. This was back in December of 2024. I told you that Nebius stock is now up 231%. That's just year to date as a free pick on Equity Empire. Less than a year ago, it was Nebius. If you want some advice from me, getting information, getting news on the mega cap stocks, if you just want to invest in Microsoft and Amazon and these kind of large companies, there's plenty of news out there. They talk about them every 8 minutes on CNBC or any other network that you watch. It's probably not the hardest thing to follow. If you want to invest in small cap stocks, you need help. You either need help or you need a boatload of time. You need to likely quit your job and every single day be researching small cap stocks. That is what Equity Empire is all about. It's about crowdsourcing our research, our abilities for a relatively low price, considering one investment is up over 200%. There's others that we've made that are up over 100%, including Oracle, which we recommended in April at 130. And I don't need to tell you, given the news flow, what Oracle is up. Those just two investments, and links down in the description below. If you want to see our performance before you commit, you can do that. But I'm not actively on here selling these types of things. I'm not creating specific content and webinars to get you to buy this stuff, because it's actually not hard to sell performance when in December you called Nebius and 9 months later, Microsoft knocks on the door and gives them a huge contract. Moving on to Tesla. Some of you guys are going to want to stop the video right now because your Friday just got a lot worse. Elon Musk's company went from 353 on Monday, up 12%, finished the week at 395. We haven't seen 400 on this shares in a while. You got a $1.2 trillion market cap on a stock that is seeing its EV demand fall to an 8-year low. This is across the board. This is the United States. This is Europe. This is everywhere. This is every model, the Model 3, the Model Y. Everywhere you look, the demand for Tesla vehicles is falling off a cliff. This comes as, at least here in the United States, federal EV tax credits, which gives you $7,500 for the purchase of one of these EVs. It used to be a tax credit. They actually knocked this off the price of the car when you buy it. Thanks to the big, beautiful bill, which was passed maybe a couple of months ago, those are expiring. And so this Model Y, which is currently being advertised at $449 per month, That includes a least incentive of $7,500. So what is this thing going to cost when that $7,500 is not provided by the American taxpayer? Right now, we are seeing a little bit of a delay on these. I think we looked at this last week or the week before. They were 3 or 4 weeks. When I bought one, I bought this exact same car that you're seeing now. I bought this maybe a month ago. Maybe it wasn't quite that long ago. I basically got one within 48 hours. Now they're saying September 25. They're going to try to deliver as many as these possibly can. My guess, this is being priced in a little bit to Tesla stock right now. People understanding that the sales in the current quarter are going to be good, but what also is potentially being priced in are other things. This comes as a Tesla engineer quits after 8 years and rightly, I believe, criticizes Elon Musk's leadership in an exit letter. He's saying this is not strictly about politics, but things like targeting minorities, supporting climate change deniers, and political forces aligned with the oil and gas industry. Most of that is likely true, and that the current United States administration is, quote, slowing down the energy transition. I don't think that is necessarily true. It doesn't matter who's in office. Just understand that one side will give you lip service about climate change, but also pump as much oil out of the ground as a Republican will. Not saying that from a political standpoint, saying that from a factual basis, that you just simply can't slow down the oil and gas business here in the United States. Now, we can talk about subsidies and those types of things, but it certainly has hurt Tesla from a brand perspective. I believe it can be repaired because over the course of my career, I've seen a number of brands be repaired. I think more recently, the best example is Bud Light. I mean, a year or two ago or whatever it was, people were like, I'm never buying Bud Light. And they were going to grocery stores and showing empty cases of beer except for Bud Light. Now Bud Light, I think their sales are off the charts. You can come back as a brand. Is Elon Musk at the center of that a good idea? Probably not. That's why I think you should get some celebrity, you should get some athletes, or you should get something, a lifestyle something, and pin it to the Tesla brand. Remove Elon Musk's figure from the brand, and you can recover as Tesla. It's not going to happen in 6 months. Might not even happen in 12 months, but you need some progress there. I'm not seeing it yet from Tesla, but what I do like is this guy actually telling something Elon Musk that he needs to hear. Elon Musk suffers like a lot of billionaires. When you get a lot of money and you get a lot of success, you only surround yourself with people that agree with you, the people that are supporting you, people that are scared to say no. Essentially, yes, man. People like Elon Musk should try to actually surround himself with a bunch of people that will tell him no. That is how he knows his decision-making is on point. This comes as Jack Ma's group, which is Ant Group, unveiled its first humanoid robot with medical and culinary skills. I will tell you right now, this is not uncommon. This is not extraordinary by a Chinese company. There's at least 50 Chinese companies that have something like this, a robot that can understand some language and that can do some pre-programmed or some task from a free-form perspective. This is not unique. What is unique, though, is an American company that can do this. Right now, there is maybe 2 companies that can do this right here in America, all in the United States. Now, they are sourcing some things from China. They're sourcing things around the globe, but there's only 2 companies that can do this. And so that is what's going to be priced into Tesla stock over the next 12 to 24 months, is there's going to be 50 to 100 Chinese companies that make robots that do something interesting, and none of them will be allowed to be sold here in the United States without some kind of massive tariff or some type of massive security investigation. So Tesla has a green field, very similar to a decade or 2 decades ago. They had a green field when it came to EVs, and we've seen the stock chart of Tesla, what it's done over the past couple of years as it's taken EVs from essentially a penny stock to over 10 years up 2,000%. Tesla's going to have the same decade, 5 to 10 year lead on any American company when it comes to humanoid robots. And I think anybody with a straight face, if you remove kind of their political biases and remove Elon Musk, we can all agree that a humanoid robot market is probably a hell of a lot better than luxury electric vehicles, which is primarily what Tesla sells. Moving on to the technical analysis segment of the show. S&P 500 just confirmed a new higher high. There ain't nothing really to worry about there. That looks absolutely fantastic. Meta, heading into the Meta Connect conference, has pulled back from the highs, is just hovering there. It closed a gap that was earlier here on the chart. You've got support all along the way down, but that one should be bought as you retreat. Apple gave you several months to buy the shares south of about $213. It popped up. We're taking a little bit of a breather, consolidating at the middle of the channel. I think as people get over the fact that they're not going to develop their own large language model and instead charge these companies tens of billions of dollars a year just to be an option on the iPhone, I think you push to all-time highs on that one probably by the end of the year. Amazon's looking really interesting technically. You're hitting up against all-time highs here. A retracement here falls you into several areas of support. Nothing to be concerned about if you come back to the 190s. In fact, that's a kind of a reverse the Rivian truck back up the truck moment. A break to the highs will likely have the chart looking like Google, Nvidia, and Microsoft when you finally have a breakout. Netflix stock has rolled over from the highs, very logical place. We are now hovering and consolidating in the middle of the channel, which is very normal. You're either looking for a break higher with Netflix here or a retest down here. Retest down here at 1100 is very exciting. Right now, your risk reward on this one, at least in the shorter term, you go from 1080 on this one or 1180 up to 1400. So you got 300 in downside, or excuse me, 300 in upside with only about 100 to the downside. So the risk reward setup for Netflix is actually pretty interesting. I actually placed a trade on this kind of in a shorter term account that I have. Just a small bet that we find footing here and we move higher from a longer term perspective. The further this one pulls back, very, very exciting. Nvidia broke from the highs back in June. We went from 150 all the way up to 180. Very logically, we take a breath at these levels. We're retesting the areas at 180. You're looking for a break higher. Any news out of China shipping large quantities of H20s into the country would send that thing back into well above $200 per share. Google, you have the highs here at 201. This is what we're looking for with Amazon, is finally you break above that. And look at that. You went from 204 on this one to 240, and it's like a skipping stone across a lake. I mean, you skipped all the way to 240. You should have some reversal there, and you'll see that with Microsoft. Eventually, you run out of steam on the breakout. With Microsoft, the breakout area was 460. You ran all the way to 560. You've pulled back almost about 50% between the highs and the breakout point. You're sitting here consolidating at 509. You don't got earnings for these for a while. And so that's why people are paying attention to the Fed and tariffs and CPI and these types of things. But those things have little impact, honestly, on most of what these companies are doing. And then finally, Tesla, we've been talking about it for a couple of weeks now. You are coiling very tightly with Tesla. And when you coil like this, you tend to break one way or another. And given that the trend of Tesla in the intermediate term was higher and the longer term trend was higher, the odds and the probability were that when you broke out of this little consolidation, you're going to break to the highs. So here we are. Can we retest all the way back up here to $520 per share? Now, the company is one of the first companies to report. They report a little sooner than most. We're about 30 days away from earnings. We're expecting that the earnings 30 days from now will likely be good because they had a lot of buying that was pushed forward because of the expiration of the tax credits. In fact, I don't think I would have bought a Tesla at the time I did if those deals were not expiring. It's what happens after that. What kind of subsidies and price corrections and those types of things that they have to do on the car. If the car is not being widely demanded now, then they have some problems. But clearly the market doesn't care, and they care more about some of the things that I talked about and the fact that in 12 months, 24 months even, you're going to be talking a lot about these humanoid robots, and you're going to be talking a lot about how China is way ahead. Like, we're ahead in AI. OpenAI and Grok and Google Gemini, this is better than anything that the Chinese have. And then on the semiconductor side, we have stuff that is definitely better than what they have. And the Chinese would admit that on a good day, and Americans will proudly pump our chest and say that. In 12 months, right now, but certainly in 12 to 24 months, China is going to be there with robots. They're going to be having robots do things that we just cannot believe here in the United States. They're going to want to sell them here in the United States. I don't believe the president that we have today, or even the next president we have, Democrat or Republican, is going to allow that. So that's going to leave one or two companies a clear advantage here in the United States to sell humanoid robots. And right now, there is one company that is capable of doing it, and that is Tesla, and that is why shares are ripping higher. Hopefully you enjoyed today's video. That was the FAANG Stock Recap Show for Friday, September 12th. Hope you all enjoyed today's video. A lot going on in the world. We won't touch on it, but stay safe this weekend and enjoy yourself and the time with your family. We'll see you again next week, and good luck with your investments.